Nothing said on Empire is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to Empire. Very excited about this one. Getting the show out a little late, but we're making it happen. Santi got a haircut. Santi looking sharp. Rob.
Hey, you know
Dude.
It's bad when people know you got a haircut, right?
Dude, you told me I got my, what did you tell me? My eyebrows waxed or something.
Rob was
he did say that. I think he literally was the first one. He's like, I got my eyebrows waxed. Like, how do they look? And then like we get on the pod, and he's like, no, Santi. Yeah, and then we get on the pod, and he's like, oh, what's going on?
Dude, I don't think I've ever gotten my
Santi, take off the glasses. Let's see the eyebrows.
Enhance.
Waxed for sure.
Guys, there's plenty to talk about and other people to roast. It's not gonna be me on this podcast.
All right, fine. Rob, how was the World Cup game? You flew to Seattle.
It was amazing. So Seattle is a great soccer town, football town. It's in the stadium. You can't undersell, and they have this in the UK and in Europe, but just how good it is when you can walk to the stadium, like from downtown, and you can hit up the bars, you can chant, you can cheer, like all the other fans are there. Because like we have these games at like MetLife or out at SoFi Stadium in LA and Inglewood, and you got to drive there, the middle of nowhere, and like they're big stadiums, but like you just don't get the same like kind of like pre-game camaraderie. And so incredible time in Seattle. I hope they go. There is going to be another game there, I think, in the quarterfinals if the U.S. makes the quarterfinals, which I am betting heavily on. So excited for that.
Let's go. And then they lost to Turkey. What's going on? Odds. Santi's trade 2.4 last time. We're up to 3.1. Good trade, Santi. Good trade.
Outperforming the markets, guys, which is not saying much these days. But
I will say your Micron trade is like good. Me oh my.
They delivered earnings yesterday.
One of the craziest earnings I've like ever seen.
Yeah, it's pretty wild. Market's down today though. Broader sell-off.
So OpenAI pulled their SpaceX went down, which then triggered, I feel like, OpenAI to pull the IPO. Now broader sell-off. Thoughts on, maybe we can start with just general thoughts on markets.
Well, wasn't it you that talked about like if a SpaceX IPO doesn't deliver as much, it likely delays some of the other IPOs, and like that's just...
My call at the beginning of the year was that the equities market would top once the SpaceX IPO happened.
All right. Well, it was nice knowing you guys this year. Should we just come back in September?
I don't think crypto markets can come back, crypto equities and crypto tokens, without some sort of rolling over of the AI market. I think there's too much capital that going in AI. I mean, not a unique take here, but AI has sucked up every bit of attention and capital in all of capital markets right now. And if you want money to flow back into crypto, you need some sort of rolling over. I'm not saying you need a huge bubble bursting, but like it wouldn't be the worst thing for crypto if AI pulled back a little bit.
I think the problem you have is that we're actually seeing like every quarter, you can tell the market is like a little bit concerned about, okay, well, like what's happening in earnings? Like, is this CapEx, are we going to get a good ROI out of it? Is there going to continue to be this upward acceleration that's happening to like real GDP to these businesses and demand for compute and for AI every quarter? And yet it keeps working. Like the PE ratios are still mostly fine. Earnings continue to grow. Like there continues to be, this sort of like nervousness each quarter, and then, the markets do well afterwards. Volatility has obviously increased. I think uncertainty is at all-time highs. Like people really clearly do not know how to forecast this stuff. There was some really interesting analysis out of Semi-Analysis a day or two ago, which was that the short-term rates on H100s, I think it was, were down like 40% like month over month, but the long-term contracts were actually still basically like going up and trending in the right direction, which is telling you that like, for people who buy spot, which is like not the actual big corporates, the people who are, kind of planning for this long term, those people have had, a kind of a discount in their, kind of willingness to pay for compute. But the corporates are continuing to put into these long-term contracts, and you see more switch that way.
Yeah.
And so I do think that, like, if you're focused on a rollover for AI in any real way in the near term, that seems unlikely to me. And so, if you believe that's what needs to happen, Yano, then I think we might be a little bit cooked. But considering what's happening with MicroStrategy right now, we might be a little bit cooked for a little bit of time. Anyways,
I agree.
So
Yeah.
we should look. Two things I want to get you guys' take on. I felt like Jordy in last pod had pretty interesting takes. Like, just hearing him talk about, he's probably one of the smartest guys, pretty plugged in, and I didn't hear him like, come out saying like he's really compelled or convicted on crypto right now. So we can talk a little bit about that. But the stretch thing, I saw a pretty funny screenshot of in one of the group chats. It was like, if you combine all the securities of MicroStrategy, it's like did you see this one? Pardon my French here, guys, but
No.
Oh yeah, I'll pull it up. But
We get demoted every time in Spotify when you swear, Santi. So I hope that was worth it.
Well, our ratings are already so low that I can go out and now is the perfect time for me to use all colorful language. We're already
when nobody's listening. Yeah,
nobody's listening, so we can all just free flow out here and have fun.
Is this the tweet, Will? Oh yeah, here.
Yeah, this is the one.
Let me pull this up.
Rob, you're in the same group, I feel like.
All right, so this was Tom Dunleavy. I've had Tom on the pod. There were signs: STRF, STRC, STRK, STRE, STRD, FCKED.
You remember the clothing brand that was FCUK or something like this?
Yeah, exactly.
Something like that.
Maybe we could talk. Actually, so I was looking at some Blockworks data actually on number of deals that are happening in fundraising, and the numbers are low. My God. So let me pull this up. So if you look at the total crypto deal count, we are the lowest by quarter. 147 total deals so far in Q2 of 2026. That is the lowest number since Q4 of 2020. So we are the lowest number of deals since nearly Q2. Yeah, I mean, you can see this M&A, right, is climbing, but fundraising is just fundraising hit actually a low in February, so the lowest month since September of 2024, and now maybe it's starting to climb back up. I'm actually, Rob, I'd be really curious to get your take here. I feel like in the later stage markets, there's actually starting to be some activity on the growth side and the later stage side, like Series C, Series D, Series B. Pre-seed and seed still feels really dry, but I feel like actually there's a decent number of companies starting to come to market with a fundraise. But more on the later side.
Yeah, I mean, you see it with the like obviously the M&A side that usually also coincides with like later stage also picking up, because we're seeing a lot of product market fit and like very specific verticals in crypto. So, the payment, stablecoin, tokenized asset side of the space, like those are continuing to grow. We've talked a lot about companies like Rain on this podcast, which, it does not matter what is happening to prices. Like they are growing tremendously month over month. Every type of company like them who is serving, call it like global fintechs, global tech companies, global, even like, corporates who want to be able to do treasury management, et cetera, in stablecoins, tokenized assets, that market is growing extremely quickly. And so companies that serve that market are also growing extremely quickly. And so we've seen, that really pick up both on the M&A and on the fundraising side. We've also started to see, I'm getting calls from like basically every fintech today that is like, hey, I'm a traditional fintech, but, we currently serve the domestic market. We want to go international. Best way to go international is to use stablecoins and tokenized assets and a non-custodial wallet and a rain card. And like that, we're launching that. And we need someone like yourself on the cap table alongside our, regular Silicon Valley venture investors who are able to, provide this like kind of different perspective, right? I'm getting all of those calls as well. The exchange side or the, call it the capital market side, That's been a little bit interesting because all of those companies are doing okay, but the token trading, the crypto trading is coming way down, down 40% on the year. But, they're all launching real world assets. They're all launching equities. They're all launching prediction markets. They're all launching pre IPO stuff. And so, we're still seeing action there. Prediction markets still obviously very active. I mean, I think both Kalshi and Polymarket are going to have the best month ever this month. And so, like, we're still seeing a lot of focus on those things that work, and we're seeing that pick up. And then all of fintech and a little bit of AI is coming to this realization that crypto should play a part of that story. And so they're calling the crypto investors, at least a few of us who have the size to do those deals, like myself and Andreessen and Paradigm, et cetera. And so that market is very hot. The early stage market, I agree with you, especially when we talk about crypto natives, like on chain stuff. Like that market is really tough, and the founder quality is really low on a relative basis to what we've seen over the last 5-6 years.
Hey Rob, can you unpack what that call looks like? You talk about fintechs, like is it like founder led motivated, or is it like, hey, the board kind of really wants us to understand, or yeah, is there a particular catalyst that, hey, we saw Stripe or we saw Facebook, right? There's like a number of interesting signals in the market, but what does the conversation look like? I'm sure they're all somewhat different in their own way.
Yeah, they're all a little bit different. I think stable coins in the fintech space and the kind of the financial market space is a little bit like AI and the was a year and a half ago, which is that since Genius has gotten passed, every board is like, hey, I know this is an annoying board question, but like, what is your stablecoin strategy? And people have had to react to that. But at the same time, what they've seen is they've started to see people expand their business using stablecoins in like a real way that's driven revenue. And so the biggest, I think, sort of light bulb moment for everybody has been like these domestic businesses or these UK businesses that have gone internationally much quicker because of the way that they've been able to figure out their kind of infrastructure. It takes a long time to onboard a bunch of new banks. Maybe there's regulatory requirements if you're going to be custodial versus non-custodial, if you're going to be deal with fiat versus digital assets. And so in some place we're like a little bit of a gray area at the moment, but we're seeing basically a lot of these say either at the board level or at the founder level say, hey, I have a good domestic business, I have a good UK business, I want to do global expansion now. And now there's a real way for me to do global expansion, save costs, but also drive new revenue, very obviously and very easily with the service providers that are out there.
What would be a good dashboard, for instance, of Blockworks to track? Like, I had a dashboard running that I think I shared with, I think a podcast I did with Hasib around like public companies like Klarna, that are doing it, obviously Western Union, and you guys have covered it well, Yano. But I'm curious, like, what would be the best signal for investors and also the broader community to quantify what you're talking about now? Right? Is there, what do you guys track, or what would be good for folks to, yeah.
So it's tough from a quantitative perspective right now because stuff that people talk about, let's say they talk about stablecoin transfer volume, right? The vast majority of stablecoin transfer volume are still just like bots trading against each other on chain, right? We can talk a little bit about the tokenized equity story that's out there and everybody's pushing, but like basically 90% of the stuff people are talking about happening on Solana is still just bots trading against each other and like low fee AMMs. Um, the but there is a there is a way to try to back into it. There's like a couple of the service providers, Allium and Visa and Artemis and Liano. I think maybe you guys are doing the same thing, trying to figure out like an adjusted stablecoin transfer volume number. Those numbers are, I think, still very much a work in progress. There's on the retail side, there's like very interesting. If you follow, I think it's Payment Scan is probably the only real person we're doing this right now, but they're following the credit card swipe volumes. Like those are really good indications of the sort of this like fintech volume that I'm talking about. It's mostly still crypto natives that they're following, but there are there's been publicly announced, to your point, the MoneyGrams and Western Unions and Slashes and of the world. Like those will probably get added to this over time, and so you'll be able to look at like, oh, what is the stablecoin backed credit cards volume that's starting to pick up, and you can see like Rain's volumes just go up every month, and a few others are starting to do a little bit of work there. You also right now, like all of the headlines is a big part of it. I think you will or you should eventually be able to follow a little bit of like some of the on-chain volume from some of these kind of big fintechs, but today it's like still not there yet where somebody can follow that. So it's really a headline topic. But I can tell you, I'm in a privileged position, but I see the pipeline of some of our portfolio companies, and it's not just like oh, these are the biggest private fintechs. It's like, oh, here are 30 public companies that are planning on launching some sort of stablecoin business, and I've actually done an RFP and I've actually started implementing this.
Yeah, I don't have the data that Rob has, which is more on the, pipeline of stablecoin stuff, but what I see is the RFPs coming in for on-chain data, or crypto data. So what you need if you're launching a crypto strategy is also you need to monitor the assets, you need intel on the assets, you need OFAC compliance, you need on-chain data. Who are the users? Where are they coming from? So we see all those RFPs. I don't see the direct. It's like a second order impact of the stablecoin growth, and it's for us. It's never been higher. Like the RFPs on that side has never been higher, and it's companies that, like, let's say we created a target account list of our top 500 target accounts. It's not even those. It's like companies we wouldn't even dream about doing. I'm like, oh, I thought you were like 15 years away from doing anything in crypto. Like you're old school, slow moving, European, or like in like South Korea. Like I had, and they're coming inbound too. So that's look, it's
Is
a
that
second order thing from Rob, but
yeah? Is that why Canton sort of like all the rage this cycle? Like, because I feel like they've done really good in terms of like enterprise convincing. And Rob, I hear you. Uh,
look at Rob smirk. My God.
what was going on? I honestly, because I don't know what, like, to be honest, like I haven't heard anyone really explain to me what Canton does. Like I would just I think they've done some really good like you know
People
relationship
people
building.
need to watch on YouTube just to see Rob's reaction right now. Rob's gonna take an anti. I'll take a pro. Rob, you can go anti
I'm not
Canton.
I'm not gonna take an anti, and I'm a fan of Yuval, and I like the team. Listen, there's two sides of to I think frame what is happening at Canton. One is that like okay, well you can talk to Broadridge, who's kind of one of the names that they trot out there all the time, and the Broadridge guys are like pretty clear, like hey yeah we use this as a better database and a better way to operate our company, and operate our repo market. We don't really have any real plan to like call it like cross canton type of trading, and to like open this up to like outside of our client base through a specific through like our front end, et cetera. And for that market, like clearly this is a really good like enterprise SaaS solution essentially, right, for those people, and they're doing an incredible job on all of those proof of concepts, and the negative framing of that is like, well, like this is kind of all this is going to be, and like like it is a better database, and it's a great like enterprise SaaS business. The other way to frame it is like the wheels of change move slow in institutions, and like eventually you will have this like broader Canton ecosystem that are all interacting with each other, and through and I'm gonna mess up their nomenclature, but they have sort of like a kind of a hub and spoke type model of which people can interact with each other. And so that's the positive way to frame it. That's the way they talk about it. Of course, Andrew's interested that did that round. And there have been people building there for a long time, right? Canton is not new. It's an 8-year-old or 10-year-old project that has kind of tried to figure out their way a little bit, and clearly have gotten a lot of they've had like Goldman as an investor and a client for a long time, and other big institutions, but now seem to be hitting their stride in a real way that they weren't 5 years ago. And so listen, they've done an incredible job in that part of the market. You can only have to look at the names on those fundraisers. There's also the story around, they talk a lot about current traction and transactions and validators and all these things. And, they've paid a tremendous amount of essentially tokens as rewards or fees back to, people to do that. And so like, it's been clearly a, sort of a subsidized, product today, but a lot of VC backed companies subsidize growth for a long period of time until they become unit economic positive. And so, that's not in and of itself a bad thing. And so, it's an interesting spot that they're in right now, because there's a very easy negative lens to view them and a very easy positive lens to view them. And they're sort of at this like make or break time. And we'll kind of have to see what the future holds. But clearly, it comes up in every conversation. And the reason I smirked wasn't because I necessarily had this negative view, but was because I've had 3 meetings today, and all three of the meetings I had this morning, Canton came up.
Yeah, yeah, that's what I'm saying. You guys, I mean, you guys look at a lot of stuff. Did you ever look at it early on? Because I sat down at a dinner next to you all, and I was like, "Wow, where have I been all these years?" And he was kind of telling me the evolution of the company, and it felt like it was like a slow grind, and then they had some key inflections. But the Goldman relationship, TradFi relationships, is something that they did really, really well. But I'm curious, did you guys look at it from an investing perspective, or have considered it? Without, like, disclosing much, is whatever you're comfortable without your
Listen,
compliance.
we've had the discussion on all kind of the last three recent raises, and we've talked to them about it. And again, I consider Yuval, if not a friend, someone that like I'm very friendly with, right? Every time we see him, and we have a good rapport. And one of the guys on my team, as you know, Omar has a good relationship with Eric, who is also running the business there. And so it's been a constant conversation. I think our where we have struggled, and we're wrong all the time, and so we could be wrong here. But where we have struggled is, getting validation that these companies want to go from, hey, this is a an interesting proof of concept, or this is an interesting, call it like enterprise SaaS database company, to like this is a thing that we want to build more into more broadly, and that we expect to see kind of a much broader type of adoption. We've also, the fundraisers are. I'm not going to go into it because it's not all public, but they're a little bit interesting in the way they think about like token exposure relative to the equity, and I think we've struggled in the past a little bit with the structure, but in a way that obviously strategics don't care about, like financials. Investors obviously have a lot more view on token versus equity, and we talked a lot about that on the pod right now. But the all the strategics obviously don't care, and so those have been an issue. But clearly, in the recent fundraising entries, and got over some of that interesting structure recently.
Robots and machines will outnumber humans on chain, and peaq is how they get there. Peaq OS enables any machine to do business on any chain. It turns machines into autonomous actors and liquid assets with ease, giving robots access to capital and the ability to compound their value. That means funds, allocators, and institutions can underwrite, finance, trade, and route capital to machines the same way they handle any other asset. Millions of new potential consumers for any Web3 service, from compute to storage to anything a machine may need, without a human in the loop. Head to peaq.xyz or click the link in the show notes to find out more. Can we some fun stuff in the prediction markets world? Rob, put on your poly market uni, because we got some stuff to defend, my friend. So there's three interesting prediction market stories this week. One is about Polymarket marketing. Two is about Kalshi potentially raising at a $40 billion valuation. And three is that Meta, Zuckerberg directed Meta to create a prediction markets app. So maybe we could just start with the Polymarket stuff, Rob, around, I think you actually called this out. You said maybe a month ago on the podcast, you said, look, there's probably going to be some hit pieces on Polymarket that, sounds like you believe competitors are maybe directing this. I don't want to put words in your mouth, but yeah, tell me what you think when you see all these. Honestly, all three of these headlines kind of tied together.
I mean, listen, like it's a very competitive space, and any time that like if you take like the overarching point here, right? It's that uh, prediction markets have had an incredibly interesting last 18 months. Both Polymarket and Kalshi, and actually Rothera, which is the Robinhood Susquehanna JV, are all going to have incredible Junes. They're the space continues to grow. The amount of like institutional traders who continue to say, hey, we want to trade on these platforms, the amount of like we're seeing that block trades get placed on platforms from institutions, the interest on the retail side is continuing to grow. And so it's very clear that this market has just outgrown some of the startup tactics that have existed before. And anytime a market grows that quickly, there's also going to be a lot of focus on it from regulators, from the media, from competitors. You're going to start seeing people enter the space like Meta. I could not be more bearish on Meta building
Same.
their own
Same.
exchange, but
Yeah, of
like
course.
that's fine. But that's going to continue to be a topic of conversation for a long period of time, because I don't think the growth in these markets is stopping anytime soon. I think these are going to be very, very, very big. And
Yeah.
so I think that's the overarching point. I think on the piece in the journal about Poly, listen, you said, hey, it sounds like some competitors are placing these things in the media. I mean, everybody who's around the space knows that there's a lot of kind of Oppo research and like negative shopping that's happening right now. If you still had a media business, all of your reporters would be seeing it too. And so like it's very clear that there are people at these companies and comms people at at the investors of these companies who are actively doing things like trying to place negative stories about their competitors. That is not that is a statement of fact. It is not a statement of opinion. Um, and the thing that that gets called out in the journal article is obviously something that was I'm not going to sit here and defend what happened. It was something that they probably should not have done. It was something that is also very common that a lot of people do. It was something that also the competitors that to Polymarket does as well, and it is not isolated to them. But somehow the journal only seemed to find a way to talk about one person, and that is because of some of the other people doing work for them. And it is something that we've seen in the rise of trading getting much more retail focused, and gambling getting much more retail focused, prediction markets getting much more retail focused, and doing a lot of distribution through social media platforms and the rise of clipping, obviously. And so I think clearly there needs to be better structure around how people market all financial markets to retail going forward. Polymarket is one of those that needs to learn from this and move on. But this was not a isolated story, even though
Yeah.
somehow the journal seemed to make it one.
Yeah, it's funny. There's a founder group chat I'm in with a bunch of founders who run, actually not in crypto, and it's a bunch of like D2C and consumer founders. And that story got dropped in there. And the main question from other founders in this channel was, do you know who they're using? Can we hire that firm? Everybody is doing stuff like that, especially, I mean, it's FanDuel, DraftKings. Like if you hire a creator or an influencer, they're not sitting around waiting for their screen. They've got business to do. They're not waiting around for like the win to hit, right? It's oftentimes what do they call it? Not a fake website. I guess a fake website. There's a term for it that I
It's usually
forget.
paper trading, right? So it's almost always paper trading,
Yeah.
and
And
this.
by the way, the crypto exchanges do this too. I'm not defending for what it's worth. There's some stuff in there that I'm like, yeah, you shouldn't be doing that. Um, but I don't know. My wife worked at Lyft in the crazy days of Lyft versus Uber, and I'm like, oh, if you think what's going on with Uber and with Polymark and Kalshi's bad, like look at what Uber and Lyft were doing. So I actually just think a lot of this stuff happens. I mean, the stakes are huge here. So I don't I don't agree with some of the stuff they're doing, but I also think this is kind of standard startup practice in some of these hyper high stakes games. Would be my take.
Yeah, there's no doubt, and it's all the trading, the direct to consumer trading companies are doing the same thing. All the direct to consumer, exchanges, all the, like, to your point, you talked about DraftKings and FanDuel and et cetera. All the prediction markets are doing the same thing, and so it was it was an interesting article to me from that perspective. Again, not to say that defending the practice and that we shouldn't have kind of maybe regulation around this and better standards around this, but the age of marketing on these types on any trading product to consumers has evolved this way, and frankly, I think that uh, we definitely need to you and I realize this, but we definitely need to figure out a way to either regulate it or make it more easy for other more normal consumers to realize that 98% of the time that somebody is talking about a trading gain in a on social media is not real,
Yeah.
and that is absolutely true.
Yeah. What do you think of, so for like 2 years, Polymark and Kalshi's valuation were moving hand in hand, right? And now you see this scoop that Kalshi's raising at a 40 billion valuation. what do you think about Kalshi's valuation kind of moving away from Polymarket?
Yeah, I mean, listen, if you look at the data, they're, call it, 1.8 to 2 times the size now, of Polymarket, at least on the most recent month. Both are still growing extremely quickly, and both are still, doing very well. But, clearly they've grown quicker, and that, and the Perps product was live, and so like, very clearly, at least at this moment, like, they are doing more revenue, they are doing more volume, and so it kind of makes sense that, if they're doing 2 times the revenue, that they have 2 times the valuation, in some sense. And so, and I think they are a little bit different businesses, and I've talked about this in the past. And Poly still continues to be very much a focus on a direct to consumer model, and they are doing things like they announced today. That they've had some really success, a lot of success in some of these integrations into their exchanges, and they went live on Telegram earlier this week, and others. And so they're doing some more of this, call it like clearing for, maybe, institutional trades. I believe it was Falcon X who did a compute trade that they cleared on Poly, and, some of the backend infra for other brokers. And so they're doing some of that, but Kalshi's way far ahead in that product right now. And that's obviously what's driving their growth, is because as these markets have grown incredibly quickly, all of the brokers have wanted to offer access to them. And so, listen, they've done a great job. And, I don't know if they'll be able to raise that money. At that amount, but like, in my mind, honestly, like it's also good for Polymarket that when they're both growing and that they both raise at high valuations. And so like, I don't begrudge them that. And so, listen, I think this is a humongous market. We're still, and I wrote our first check into Polymarket, almost 2.5, 3 years ago. Now the valuation, change since that time has been incredible. And like, we remain very long and very excited about the future of Polymarket specifically, but also prediction markets more broadly. And like, I think people underestimate how big these markets can be.
Yeah.
I may have missed this, but like, how do you think the main concern that I get? Like, I feel like prediction markets are like the best product in mainstream people. They get really excited. They've used it, but the common question I get is like how defensible and how monetizable it is. Have you guys like updated your thinking like 2, 3 years ago to today? And does it concern you around like defensibility, moats, and whatnot?
So so there's a couple of interesting things happening. And I was having this discussion with sort of like an institutional kind of like middleman for like institutional trading earlier today, like a company that kind of facilitates trading and PMS and EMS and things like that. And they've seen a lot of demand among kind of like big institutional traders for both support in the PMS. So, and just so for our audience knows, a PMS is like a portfolio management system that does like risk management and like reporting for your trading, and the EMS, which is like the execution management. So actually executing the trading on exchange. And so they've seen a lot of demand from their institutional customers to support both these platforms on both execution and on the risk side. And so what does that mean? That means institutions are coming. Today, I think most of the institutional access, quote unquote, on these platforms are just market making, because they see it's retail flow on the taker side, and so that's very soft. They're able to make good spreads on those things. But it is true that on Kalshi it's still like over 90% sports when you add in parlays. On Polymarket with the World Cup today, it's like 55, 60%. And a lot of these guys actually don't want to market make sports necessarily. Like there's businesses that have done that for a long time. Susquehanna has done that for a long time, and they're the biggest in the world at it. And there's other market making firms that do that. But the Bitcoin up down markets have done really very well on both platforms, and those I think a lot of market makers have been around. But those markets alone aren't institutional markets. But we've started to see signs of life where I talked about the block trade that Falcon X did on Polymarket for compute. I think Galaxy did. I think it was also compute, a block trade that they did on Kelshi. Yeah, and so like there's some signs of life there from the institutional side. We've started to hear a lot of early days of conversations around insurance linked contracts and other linked contracts, but they're mostly happening through like RFQ, and then they're or kind of like directly brokered through a prime, and then they're being cleared on one of these two platforms. I think the clearing opportunity is huge. We don't talk about that as much, but I think probably I don't get the Kalshi pitches, as you can imagine. But I'm guessing they're talking a lot about the clearing opportunity when they go out to these markets, not just like the brokerage and side of the business. And so that I think is going to be incredibly big. On your point about revenue and take rates, listen, the take rates right now are Kalshi is about, I think, call it roughly 2x, maybe a little less, 1.5, 1 to 2x above poly market. I think there's clearly going to be fee compression. And so, any of these people are looking at these rounds for either of these two need to update their models on that. But I don't think they're indefensible because at the end of the day, liquidity begets liquidity, and we're going to and we're going to continue to see that grow. And then for Polymarket specifically, but Kalshi is also making more strides here. They have a great retail brand, and so on the direct to consumer side, I think they will continue to do well.
I was trying to explain and I think I remember asking you in a pod back a couple months ago, like when Polymarket and Kalshi were similar valuations, and FanDuel was at that same valuation. Like I think DraftKings in the public market has been getting crushed. I think it's down 50%. It's trading at like 11 billion, which is secondary for Poly, give or take. And it's trading at like 2 times revenue, and I think I was trying to make sense of that. Like, hey, like from a risk reward standpoint, I think I don't agree with your last point. I think the market's sort of saying, look, prediction markets are just much better products, and from a customer acquisition standpoint, the ability to bet on very discrete type of things, like if you're a user, I guess you've known of DraftKings, FanDuel for a while, some of these other platforms, but like prediction markets have just captured the attention of a user that wants to bet on all these other things that are becoming way more fun. And I think that's sort of that's how I rationalize, like, hey, how can you justify a valuation that is on most metrics just doesn't necessarily make sense. But I don't know if you would agree with that or disagree with that.
Well, I think people get on DraftKings and FanDuel, they have one product very clearly, which is we do sports, and we are mostly a direct to consumer platform. We're not doing clearing. We don't have this institutional sort of story about the future. And I think DraftKings announced that they did 3.4 billion in annualized volume last week, right? And so let's just be very clear. They had 3.4 billion of annualized volume last week. Both Polymarket and Kalshi did more of actual volume last week, right? And so the DraftKings prediction market is extraordinarily small relative to those two and even Rothera now. And they feel capped in terms of, even if they launch prediction markets, what they can offer people. And when you think about, what I just talked about with the clearing opportunity and some of the institutional trading, and obviously Kalshi, be it with Coinbase launching the first perps in the US, there seems to be a story here about a modern digital exchange that is focused on the net new products first, but can grow. That like calls to a much bigger imagination for what these can be than DraftKings or FanDuel. And so even though it's 92% sports on Kalshi today and 60% sports on Polymarket, but the people who are investing in these things do not believe that is the long-term opportunity set. They believe the opportunity set is a lot bigger, and it's impossible to convince anybody that the opportunity set is bigger for DraftKings.
Yeah. Let me move us on to, there are 2 other interesting deals. One is that maybe we can talk about Kraken and Aave. So I don't know if folks saw this week, but there was a CoinDesk report, which I will say, Stani and Luigi at Aave said this is maybe not completely factual, but let me tell the story and then I can walk through Stani's response. So there was a CoinDesk article, Kraken in talks to buy 15% stake in Aave at a $385 million valuation, which is obviously quite maybe strange to someone who reads that because the market cap of Aave is 1.4 billion. So, it's obviously a huge discount. What's the math on that? 70% discount roughly. So crypto exchange Kraken in talks to acquire 15% stake in Aave at 385 million. According to 3 people familiar with the deal, a potential deal would see Kraken investing 35,000 ETH in return for 250,000 Aave tokens and a 15% common stake, equity stake in Aave Group, according to a document seen by CoinDesk. So Stani responded. He said, lots of discussion around Aave. I want to clarify a few things. First off, there's no way we'd sell Aave at a 70% discount. Second, 100% of Aave protocol and Go revenue goes to the Aave token. No protocol or product revenue goes to Aave Labs. Aave Labs owns an allocation of Aave that multiple market participants have discussed purchasing either directly or indirectly, um, and a few other things. So just curious, when you guys see a deal like this, what you think is going on behind the scenes.
Um, so I know the details, and I'm not entirely sure what I can say publicly or not publicly. But what I would say is the article is wrong in terms of the details. And there has been, of course, strategic interest, in Aave the same way there has been in Morpho and some others. You've seen Uniswap announce something, et cetera. And typically when you see prices like that and things like that, I would expect there to be it, it's something happening probably that's more equity like than token like, and that's probably like the kind of the where I would leave it. But what I would just simply say is, that's typically what's going on. Why this got leaked, there could be a bunch of reasons. I don't know why. So, but usually when things like this come out, or things about new fundraisers and certain valuations come out, they get leaked for one of two reasons. They get leaked from one of the parties involved because they want to pressure somebody to, maybe make a deal, or they want, things to trade away. So like maybe it makes it harder to do a deal. Or there's just like incentive to like make yourself look good, et cetera, or make the other party look bad. And so I don't know why it got leaked, but I think, listen, I think the broad strokes are that people like Kraken, other fintechs, other exchanges are very interested in figuring out how to deepen their relationships with on-chain lenders, and on-chain businesses who can help them bring a sort of a DeFi, CDFi type experience to their net users. And at the end of the day, that's probably the main takeaway from anything that Aave might do.
Is this so just unpacking that a little bit, exchanges like Kraken and Coinbase have been very active in vaults and offer is that the main rationale here? Like they want to offer basically create a stickier depositor base. If you're holding stables in an exchange, you want to offer them like a vault that pays you, T plus like a compelling juicy yield there. And that makes them like, you know, basically you're just a more valuable business if you have stickier depositor base.
Yeah, so this isn't specific to this Aave situation, but I'll make a broader point, which is that it started with like Coinbase Vault, or there's the CBBTC vaults on Morpho with Coinbase, and there's Kraken doing vaults like that as well, Aave and others, and there's a lot of now talk as well around like on-chain equities, and is there a way to do like securities lending through sort of these types of vaults as well, then in the future as more RWAs happen, and is there ways to kind of expand the addressable market of the things that we do with all tokenized assets, and is providing a money market like these, probably a core primitive to that. And I expect that is, as you hear Kraken talk about the everything exchange and Coinbase talk about the everything exchange and Bybit and Bitget and Binance talk about the everything exchange, I'd expect that is a lot of what they're thinking about is both not just what exists today, but the future.
Yeah.
Hmm.
Do you think that this deal closes, or I guess the rationale for the deal would only make sense to a strategic like an exchange, or would a fund potentially be also in the mix?
I think in so much as Aave is interested to do anything right now, it is strategic in nature and not fund in nature. They don't need money.
Would they have done this deal if the Keltdow situation didn't unfold, and or if Morpho
I
didn't?
don't think that has anything to do with this, the Capital situation.
Got it. Morpho, just pressure from them.
I mean, these two are like, it's, we're talking about like, Uber, Lyft, and, Kalshi Poly Market. And, these guys are obviously, both Stani and Paul are, very polite people. And so they're not, they're not going at each other in the same way, but it's like sort of the same level of competition, right?
Same.
Like,
It's the same. And which is there's
yeah,
a holy grail right now, which is integrations are now the thing that all of these lenders need and want. So integrating into Kraken and Coinbase, and there's an all-out sprint right now for integrations. So if Morpho powers Revolut or Aave powers Kraken, that is the dream. And so actually you'll all these both teams are just beefing up BD, go to market, hiring in Asia, Europe. the US, and raising lots and lots of capital. And we saw the Morpho fundraise, right? From Paradigm, I think it was, and many other folks. So
Paradigm, Andreessen, and Ribbit all participated.
yeah.
Yeah.
Yeah. Which Ribbit, I think, has been along from day one.
Yeah. They were there in the last couple of rounds.
Does it make sense like this from a strategic rationale perspective? Like, why does this make so much sense for someone like Kraken? Like, DeFi, as far as I can tell, is permissionless, and you can just tap into these
Well,
protocols.
Kraken rolled out Earn. Kraken rolled out Kraken Earn.
Yeah, no, a Coinbase guy ended up. I think you introduced me to him.
Zettler, yeah, Zettler, exactly.
Was there. I remember having a really good conversation with him, and he was super. This was almost 6 months ago or so. But why would Kraken need to invest in Aave other than maybe potentially getting a pretty big discount?
Like, why does any strategic invest into a service provider or a company that they want to do business with? It's to deepen that relationship. It's to make sure that you potentially can do things together that like you might not be incentivized to do otherwise, that you are able to obviously I don't think that's not going to happen here, but exclusivity, like things like that. Like
I guess this is the equivalent of NVIDIA investing in the major suppliers and or bottlenecks, and because they're going to drive up the valuation higher. Like, you know what I mean? Like, it's very synergistic. If Kraken drives $10 billion of deposits into Aave benefits their investment benefits. So
yeah, well, and that's true too. And also, like, all of these places have they have only so many engineering resources. And so sometimes you want something that is prioritized, right? And so how do you get somebody to prioritize your integration for somebody else's integration, or your product for somebody else's product? You invest.
But by the way, this is not Kraken investing. So this is actually, Arjun, by the way, I think we have to have him back on the pod. He's a killer founder or a killer CEO. He was a board member for many years at Kraken. And then, Jesse rolled off.
One of the biggest investors was Tribe invested in Kraken.
There's Payword is the company that they really want to IPO. Kraken is a subsidiary of Payword. Payword will have many arms. Payword Asset Management is one of the new arms. This would be the first deal in from Payword Asset Management. Is the way that I understand it.
Yeah, but Payword existed for a long time. Yes, they're gonna have a bunch of different things underneath it. By far and away, almost all of the value in Payword today is Kraken.
Totally.
Yeah. By the way, speaking of Kraken, secondaries come down quite a bit, as far as I can tell. Have you guys looked at this at all?
I haven't looked at it. No.
Yeah, I think it's at like a pretty interesting discount. I guess like in line with broad crypto stuff. But I remember there was a round that was done last year, right, on the like pre-IPO round, and I guess now there's a deeper discount to that last round valuation. I think it was like 19 billion. Now you can get it probably at 10, 12.
Yeah, so Deutsche Börse did a secondary that they publicly announced. I think this was in March, maybe. And they didn't tell you the exact valuation, but you could back into it, and it was basically around 13 bill.
13 billion.
And so,
the last round was 19, close to 20.
No, I think the last round was 15, if I'm not mistaken. And so, but listen, like they're watching all these new products. They've done a bunch of acquisitions. They're trying to think them through, what the future of Kraken looks like, or Payword looks like, which is obviously, like everyone else, includes non-crypto assets as well. And so I think like that's clearly driving a lot of the their future or forward looking in how they think about fundraising. But of course, like crypto trading is down 40% for everybody this year.
Yeah. Last deal I want to talk about, because we only have a couple minutes left. Fomo raised 75 million Series B from Index, USV, and Benchmark, which is quite impressive, I'd say, in this market, especially to raise from Benchmark and Index, who don't usually do crypto deals. Rob or Santi, I don't know if you're an angel. Rob, I don't know if you guys looked at this or did this. To me, I've never used the product. I think they're ex-DYDX folks who I think really highly of, but seems like another crypto trading app that's competing directly with a Polymarket and a Kalshi and a Robinhood and a Coinbase and a Kraken. But like maybe I'm missing something here.
Yeah, so so in full disclosure, they did an angel round pre-seed and didn't let any funds in, and so I actually did that. So I'm actually an investor through that angel round that they did pre-seed. Dragonfly as a fund did look at the round that Benchmark did, which was the A, and they had great traction, they had great retention. The guys were doing a very a good job on the product. We didn't look again at this round that index led, but it's sort of, I think, kind of the just kind of what they said they would do in the beginning. They've been doing, so I don't think the story has changed, which has been that we want to be a place for social trading. So they have the leaderboard, they have the chat, they have a place where people can essentially put out theses on like why they're doing things, and it's really about bringing like a social trading experience. Today, I believe they have perps, they have spot, they on crypto, they have RWAs. They're trying to expand out, I think, to be a broader trading app. So sort of the theme of what we're talking about with the exchanges as well, I think, is also the theme of what we're talking about with apps like theirs, which is that we want to be the place for all assets, all asset classes, as people more easily switch between trading different asset classes. It is definitely a crypto focused product today. My guess is the story they told when they were talking to Index was not about crypto, but about, hey, social trading and the way of which the social experience is interacting with finance and what that looks like in the future.
Yeah. Rob, I know you got to jump. Content of the week. Sorry, Santi, unless there's.
No, I was going to compare it to eToro, but not as relevant. Let's go to content.
Yeah, well, I think early Robinhood too is like a good way to think about it as well.
Yeah. Content of the week. Rob, no, you got to jump. What do you got?
I mean, I'm not watching anything but the World Cup right now. So like, World Cup, like all day, every day. And so the content of the week is Bosnia-Herzegovina versus the USA, 9 p.m. Eastern, or 8 p.m. Eastern, I think, on Wednesday, this upcoming week. Watch the US continue to move on their way to their first World Cup finals. Okay. And the first semifinals since 1930. And the first quarterfinals since believe it was 2002, the last time they made the quarterfinals. When, by the way, Greg Berhalter, who is the parent of Sebastian Berhalter, who scored last night, and Claudio Reyna, who is the parent of Gio Reyna, who also started yesterday, were both Berhalter wasn't started, but we're both on the team back in 2002. So historic run for the U.S. coming. Watch it this Wednesday, and then the following Monday, and then the following Friday, and then the week after that. It's going to keep coming.
Let's go.
Yano, your content? I'm stalling.
Content of the week. I realized that Henry Kravis, who's one of the founders of KKR, had written 30 blog posts outlining his life. And I went down the rabbit hole and read all of them. They're actually quite quick, but they're on like pretty deep topics. It's one chapter 28, the shock of losing my eldest son in a car accident. Chapter 29, the best days of my life. Chapter 25, looking for talent beyond skills and track records. And they're quick pieces. Like I'll pull it up here. So each one is about a 5-minute read, 2 to 5 minute read. And it's I just spent like 2 hours and just read all 30 of these, and I obviously already respected Henry Kravis, knew nothing about him though, and just gained a lot of respect for the firm and this guy.
Well, I'm going to cheat because to Rob's point, I've just been World Cup maxing. But Barbarians of the Gate's a really good book if you want to learn about just financial.
He talks about this idea that he's like, it really hurt our brand. Like people saw us as barbarians, and
similar. Bending Spoon's going to IPO. Pretty interesting. I'm reading the prospectus this weekend. They're trying to be like Berkshire Hathaway in Europe.
Go listen to the episode on Invest Like the Best with the Bending Spoons CEO.
Pretty interesting. Yeah.
Cool.
Yeah.
All right, folks.
Thanks,
Happy
guys.
Friday. Go US. Let's go.
Go America.
Hey, folks.
Yeah, Santi. We got Santi on the America side. Let's go.
I'm going to get crucified, but I'm good for America.
Good luck, Santi. Good luck. All right. Cheers, folks. Have a good weekend.